For 8 years, one man ran a $17 billion fund at Fidelity. It compounded 19% a year. It beat 99% of its rivals. Then he left, started his own fund, and named it after the noble family in Dune. Now here's the part that stands out. Through the end of June, tracker accounts put his picks up roughly 190% since December 2019. And his number one stock is not Nvidia, not memory. It's a small company that makes the part of AI almost nobody talks about. The wiring that lets chips talk to each other. In 3 minutes, we'll get to the name and why he keeps buying more. The name is Gavin Baker. 18 years at Fidelity, from 1999 to 2017. From 2009, he ran the Fidelity OTC fund. Over that stretch, it compounded roughly 19% a year, finished ahead of 99% of comparable funds by Morningstar's count, won 6 Lipper Awards, and in 2014 the Boston Globe named him Fund Manager of the Year. He also helped run Fidelity's venture investing, which put him into private names like SpaceX and Uber early. Then, in 2019, he launched Atreides Management. His whole framework starts with one question. In AI, what is actually scarce? His answer is not ideas. Algorithms leak, they spread. What stays scarce is compute itself. The ability to stand up 10 times more computing with the power, the chips, and the supply chain behind it. He calls AI not a bubble, but a supercycle. And he believes the durable advantage sits in that physical layer. Now look at the receipts. His May SEC filing shows $5 billion across 54 positions. Concentrated. Then, in late May, Credo completed its acquisition of Dust Photonics, a silicon photonics startup Baker had backed on the private side. The deal was worth up to about $1.3 billion. From that one question, his whole map has 2 floors. Floor 1, the bottlenecks are physical. In July, citing a joint Micron and Meta white paper, he posted that the DRAM memory bottleneck almost certainly lasts the longest of all the shortages in AI. That's why Micron sits near the top of his book. Floor 2, scarce things still have to be connected. A cluster is tens of thousands of chips acting as one computer. The data has to move between them at full speed. If it doesn't, the whole thing waits. So his book is full of connection companies. Ciena for the long-distance links. And Nvidia, he owns that too. But it's not even in his top 3. Now here's the interesting part. None of those is his number 1. The stock he added to hardest in the first quarter sits exactly where those 2 floors meet, where scarce chips get wired into one machine. The top position in his stock book, about 7% of it, is Astra Labs, ticker ALAB. What Astra sells is actually easy to picture. Inside an AI server, chips have to pass enormous amounts of data to each other. Every inch of the board weakens the signal. Astra makes the small chips that clean up and direct that traffic. It started with signal repeaters. Now the bigger product is a switch called Scorpio. It's the traffic controller that wires whole racks of AI chips into one giant computer. In the quarter reported May 5th, revenue hit a record $308 million. That's up 93% from a year earlier. Guidance for the quarter reporting August 4th goes up to $365 million. That's 15 to 18% higher in a single quarter. And the mix is changing. Scorpio was 15% of revenue last year. The company expects it to become the largest product line by the end of this year. Then, in late June, the stock entered the NASDAQ 100. And Baker's history here goes back years. Atreides was an investor in Astra's Series C round back in 2021, almost 3 years before the stock went public. His single biggest buy in the March quarter was more Astra. So the catalyst window is now. August 4th is the next report. And the second half is when Scorpio's biggest version ramps. So what could we actually confirm? The position is real. Astra Labs sits at the top of the stock list in the May 18th SEC filing, about 7% of a $5 billion book. The revenue record and the August guidance come straight from the company's reported results. The Credo acquisition of his photonics bet is an official, dated announcement. Now, for the honest caveats. The filing is a snapshot from March 31st. The 190% figure is a tracker estimate, not an audited return. And his total $7 billion size includes private funds, which is press reporting. So we built this episode on the audited layer, the filing, the earnings, the signed deal. So what breaks this trade? First, and biggest, the industry has not settled on one standard way of wiring AI chips together, and Astra's switch bet rides on one side of that fight. Broadcom is pushing the rival way, using Ethernet. It's already shipping a switch for it, Tomahawk Ultra, built to link over 1,000 chips into one cluster. If the biggest data center builders pick Broadcom's road, the market for Scorpio, the traffic controller switch Astra is betting on, gets smaller. Second, NVIDIA is both a player and the referee here. It sells most of the AI chips, and it wires its own racks with its own system, NVLink. It has begun opening that system to select partners, Astra among them. Partner or not, the biggest player in the room decides which wiring wins. Third, concentration, straight from the company's own annual report. In 2025, one customer was over 70% of Astra's revenue, and the top three were about 86%. Lose one of them, and a year's growth plan changes. So watch one number. The August 4th report. And inside it, whether the Scorpio switch keeps climbing toward becoming the company's largest product line. If that mix keeps shifting, the thesis compounds. If Scorpio stalls, the wiring story loses its engine. Time for the channel scoreboard. Today's entry, Gavin Baker. Astra Labs, ticker ALAB. The starting price is on the board on screen. Now look at the board. 5 different investors. And every one of them keeps ending up in the same place. The physical layer of the AI trade. Chips, power, memory, and now the wiring between them. That's either a coincidence or a map. Every call we cover goes on the same board. Subscribe if you want to see who is actually right. Already trading on Ondo and X stocks. Through a broker, you trade market hours only. On-chain stocks trade 24/7, 365, straight from your wallet. We prefer on-chain for one reason above all. Your profits stay yours, untaxed, not financial advice. Do your own work on the price you pay.